Welcome back to Investing Talk Podcast.
Today we're looking at a really interesting one, Rocket Lab.
Yeah, and the core mission for us today is to really get under the hood and understand how this company, which most people think of as just a small launch provider.
Right, the Electron rocket.
Exactly.
Yeah.
How it's turning itself into this vertically integrated space and defense powerhouse. We really have to move beyond that, just another rocket company narrative.
Absolutely, and the timing is critical. I mean, the news flow has been huge. We're talking about a company that just secured a contract worth up to $816 million.
With the Space Development Agency, the SDA, that's a massive deal.
It's a generational deal. And you pair that with just, operational excellence, a record 21 successful Electron launches in 2025. Suddenly, the whole investment thesis looks completely different.
It really does. So we'll break down the fundamental engine behind that growth. Then we'll look at the technicals, see if the chart backs up the story.
And after that, we have to talk about sentiment. Analyst targets, insider selling, all of that. And then wrap up with the big risks. Because with a story like this, the risks are just as big as the opportunity.
As usual, before we start, subscribe, like, and comment to this video to support the show and stay up to date with our latest analysis.
Okay, let's unpack this and jump straight into the fundamentals. This is where the story really gets interesting.
So before we get to the big revenue number, what's the one thing that tells you this isn't primarily a launch company anymore?
It's the revenue split. That's the smoking gun. So in Q3 2025, total revenue was $155 million. That's a strong 48% year-over-year increase, beat consensus estimates.
Which is great on its own.
It is, but the real structural change is where that money came from. Historically, Electron launches were everything. Now, the engine of growth is their space systems division.
The satellites and components.
Exactly. In Q3, Space Systems brought in $114.2 million. It grew almost 17% just from the prior quarter. They are now, first and foremost, a satellite and component manufacturer.
Wow. So launch is secondary.
Well, launch services did jump 94.8% year over year, thanks to those 21 launches. But it's the satellite side that's providing the scale and, more importantly, the margins.
Okay, hold on. I'm looking at the margins, and they look good. 37% GAAP, almost 42% non-GAAP. That's really impressive. But the adjusted EBITDA loss was still $26.3 million. So if the revenue is great and the margins are getting better, why are they still bleeding cash? When do we see profit?
That's the key question, right? And the answer is all about the margin trajectory and where they're choosing to spend their money.
Okay.
So first, the margin improvement comes from that higher margin space systems mix. I mean, think about their Solero solar panels. Those can have 60 to 70% gross margins.
Wow.
And second, they're getting more efficient with Electron. Revenue per launch was up over 44%, while the cost per launch only went up 18%. That's real operating leverage.
So the loss, it's a strategic choice.
It's a strategic choice, and it's tied to one word, Neutron.
Right. Their next-gen rocket.
Yeah.
So how safe is their cash position to fund that? I mean, is this just a race against time?
It doesn't feel like it, and that's because of their visibility. Their total backlog is massive. It's $1.1 billion.
$1 billion. And I assume that's anchored by the SDA contract?
Heavily anchored by it. And what's critical is management expects 57% of that to turn into revenue in the next 12 months. That gives you incredible assurance, independent of when Neutron actually flies.
And what's the cash pile look like?
They're sitting on over $1 billion in cash and equivalents, which is vital because the total cost for the Neutron program is budgeted at around $360 million through the end of 2025.
So they're well capitalized to get it done.
They are. And management keeps saying that spending is at or near its peak right now, so that cash burn should start to come down pretty soon.
So let's define the competitive moat here. It's that full stack, but what makes it so different?
It's really twofold. First is the vertical integration itself. Launch Electron and Neutron plus the satellites plus the high margin components. They can sell you a whole mission in a box, basically.
Controlling the cost and quality all the way.
Exactly. But the real game changer, the thing that separates them, is becoming a defense prime.
That SDA contract again.
Yes. That and the acquisition of Geost, it positions them as a prime contractor for the U.S. military. They're not just a supplier anymore.
That really does change the narrative. Being a defense prime means you have these sticky, long-term government relationships.
Yeah.
High switching costs. It's not just about who has the cheapest launch.
It completely differentiates them. They're solving national security problems now. Analysts are literally framing Rocket Lab as the only credible, public, vertically integrated competitor to SpaceX in the U.S. at scale.
That's a powerful statement. That scarcity value has to be a huge part of the valuation.
It is. The government needs them to succeed to avoid being dependent on a single company for critical infrastructure. That's a massive strategic asset.
Okay, that's a powerful fundamental case. Let's pivot now to the charts and see if the market agrees, because the price action has been dramatic.
Dramatic is the right word. I mean, for anyone looking at the technical picture, the stock is just in a powerful secular uptrend. It's up anywhere from 170% to 250% over the last year.
And a huge part of that was after the SDA win, right?
A massive surge right after that news. It's classic momentum.
For someone who's maybe less familiar with the charts, what does that classic breakout behavior actually look like?
It's the textbook definition. You see a clear pattern of higher highs and higher lows. The price is trading way above its key trend lines, like the 50-day and 200-day moving averages.
And that tells you institutions are buying in.
Exactly. They're confident and they aren't letting any small dips last for long. The trend is just very, very strong. A key level everyone is watching is that $70 to $72 region.
That was the old resistance.
It was. And now that the price is clearly above it, that level is expected to act as a really strong floor, a strong support level on any pullbacks.
What's driving the psychology here? Is this just retail excitement, or are the big funds chasing this too?
It's both, and that's what makes it so powerful. You see it as one of the heaviest weightings in Goldman's memes basket, so retail is absolutely in there. But the institutional funds are pouring in because they can look at that $1.1 billion backlog and justify the move. It's momentum, but it's momentum backed by, real tangible contracts.
I see the RSI, the relative strength index, is pretty high, around 73. Is that a concern that it's overbought?
Normally it might be, but for a stock like this, a secular leader being overbought can last a long, long time. It just means the buying pressure from all the good news is overwhelming any short-term selling.
So the technicals are basically confirming the fundamentals. The chart is pricing in success.
It's pricing in the success of Neutron in the defense business, absolutely.
Okay, now let's transition to sentiment. Let's talk about how the broader market is feeling about this company, starting with the analysts.
The mood is just incredibly bullish. I mean, 7 out of the last 10 major news headlines were positive.
And the analyst targets have gotten pretty wild.
They really have. You have Baird raising their target to $100, calling it their top space tech pick. Needham raised theirs to $90. These are huge votes of confidence.
What's the core catalyst they're all pointing to? What justifies a price target that's double or more from here?
It all comes down to those two things we've been talking about. The defense prime status from the SDA contract and the Neutron debut, which is targeted for Q1 2026. They're aggressively modeling the success of both of those huge events.
So they see Neutron unlocking billions in new contracts.
Exactly. Billions in new government and commercial contracts that drive massive operational leverage.
All right, now for the reality check. Insider sales. Over the past 90 days, we've seen over $150 million in sales, including from the CEO and COO. That looks bad on the surface. Is it a red flag?
It's a great question, and you have to look at the context. These sales happened after the stock went up hundreds of percent. And critically, they were mostly done through pre-planned, what are called 10b5-1 plans.
So they're scheduled months in advance.
Right. It's typically seen as executives just taking some profits and diversifying after a huge run. It's not like they're panicking and dumping stock based on some secret bad news. And the market has absorbed all that selling without breaking the uptrend, which is the key tell.
Fair enough. So beyond the core story, what are the big what-ifs investors are speculating about?
Two main things. First, more M&A. That they'll use their passion stock to buy more companies to deepen that defense moat. And the second, much bigger one, is that Neutron becomes the go-to alternative for customers who are currently totally reliant on SpaceX. If it's reliable, reusable. It could just unlock a multi-billion-dollar market of customers who want to diversify their launch options.
Let's dive into the risks now. No stock that runs this hard is without its bear case. I think we have to start with the valuation. It's staggering.
It is the most difficult thing to justify. Rocket Lab is trading at, you see numbers from 48 to 77 times trailing revenue.
Whoa, that's a huge range. 48 to 77. Why the big difference?
It just depends on what analysts are including, whether they're looking backward or using forward estimates, if they're including warrants from the SPAC deal. But look, the exact number doesn't matter as much as the conclusion.
Which is?
This valuation price is in flawless execution. Perfection.
So there's zero margin for error.
Almost none. Any minor issue with an Electron launch, any slip in the SDA contract, or especially any delay with Neutron could cause this premium multiple to just collapse.
The bullish counter to that, I guess, is the scarcity value we talked about.
It is. The argument is that there are just very few public companies like this. You're paying a premium for a unique national security asset. And more importantly, with Neutron R&D peaking, you can see a clear path to positive cash flow. The market is paying for that future inflection point.
Okay, what about the core risk Neutron itself? It has to go up against Falcon 9, which is a proven, reliable, low-cost beast. How do they even compete?
That is the core risk, precisely. Neutron is unproven, and its success and on-time debut in Q1 2026 are absolutely critical. They are facing fierce competition from SpaceX. Neutron has to work, and it has to be efficient.
Does their track record with Electron help de-risk that at all, or is it a totally different animal?
It absolutely helps. That 21 launch, 100% success year gives them enormous credibility. You trust their engineering team. It's not like a brand new company trying this from scratch.
And I guess the safety net is that the whole business doesn't depend on it.
That's the crucial part. The space systems business, the SDA contract. That revenue keeps scaling even if Neutron is delayed. The core business of building satellites mitigates the immediate financial hit of a launch setback.
So, having analyzed the fundamentals, the momentum, and the risks, where does that leave us on the final investment thesis?
The analysis yields a consensus bullish score of 8.5 out of 10. That's a strong vote of confidence.
And the verdict?
The verdict is pretty clear. Rocket Lab is successfully making the transition to a vertically integrated space and defense prime. That $1.1 billion backlog de-risks the near-term growth.
And Neutron is the long-term catalyst.
Neutron is the transformational catalyst. It's expected to drive revenue to over $1 billion, maybe $1.5 billion, and push margins up over 40% in the next few years. They've proven they can execute. Now they just have to prove they can scale.
So the timeline here is definitely a multi-year hold, 3 to 5 years maybe.
For the full story, yes. But for those looking for shorter-term events, you have to watch the Q4 2025 earnings in late February, and then, of course, that first Neutron launch window in Q1 2026. Those are the big milestones.
Here's something for you to mull over then. We know the U.S. government is structurally incentivized to avoid depending on a single company in space. So given Rocket Lab's unique position as really the only public integrated U.S. alternative to SpaceX, how much of its current premium valuation is just reflecting its strategic necessity to national security, almost regardless of commercial launch pricing?
That's a great point. That strategic positioning is a powerful long-term asset that might just justify a permanent premium.
That's a great note to end on. We encourage you to do your own research. If you appreciated this analysis, please make sure to subscribe, like, and comment to support the show. We'll be tracking those Neutron and SDA milestones closely